Welcome back everyone to the trading world. I'm going to start this video out by showing you guys something that I discovered about price action that I think is super valuable to implement into your trading. And once you see the market in this way, you are going to have a completely different perspective on what exactly is going on, and it's going to hopefully revolutionize your trading. So what I'm talking about is understanding when the higher time frame is going on a low resistance liquidity run. So what does that mean? What does low resistance liquidity run mean? That means that if we have here, this is a good example of this. If we have a trend line of lower highs, so basically a trend line, right? If we have a trend line like this where each high is lower, 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 when the market eventually expands through that, that's what's called a low resistance liquidity run. The market's going to seek to hunt back towards these trend lines of lower highs and higher lows. So you can see an example of this here where there's the inversion for value gap. We get that closure above the gap and then aggressively expand during the lunge macro. This was a amazing trade, and you know, this actually might have been, probably should have been trade of the day. This probably should have been the tweet for trade of the day, but that's besides the point. This is a low resistance liquidity run when the market runs through these low resistance highs. However, until the market is ready to go run through those low resistance highs, let me find an example. Until the market's ready to go run through those low resistance highs, the market is high resistant. Let me show you. So an example of this could be, actually this is an example. So the same low resistance highs are they're actually high resistant until they become low resistant. So meaning, right, we have the trend line forming. It's high resistant. We get rejected by the trend line. We get rejected by the trend line, rejected by the trend line. And then eventually it breaks. And then when it does break, it becomes low resistance. So the valuable thing I want to tell you guys about the market is, what's cool is, let's actually zoom out and look at this higher time frame candle for a second. Right? When you look at this higher time frame candle, where was it? Right? This is the market expanding on a low resistance liquidity run, right? Why? Because there's low resistance highs over here. When this was happening over on this side of the curve, it was high resistant. The market was pushing up into it. High resistant, high resistant, high resistant, high resistant. Over here, this is low resistant, right? The market's running through these now low resistance highs that were once high resistant. So what's cool about this, right? So the higher time frame, or aka the 1 hour chart, is expanding on a low resistance liquidity run. We can identify that by, looking over on the left side of the chart and saying, wow, these are low resistance highs. So what's cool is when the high time frame is doing a low resistance liquidity run, when it's expanding, essentially when the high time frame is getting some explosive move in a direction, the lower time frame of that same high time frame move is going to be high resistant. Check this out. This is super valuable. This is an example of what I mean. So the market pushes down into the same trend line and it refuses to break. And the analogy I was giving in my backtesting session today is, this is like a pothole being held down. You're putting your hands on top of a pothole, but there's a whole bunch of force pushing up on that pothole. And it's only so long before this high resistant liquidity explodes in the opposite direction. And so most people would overlook something like this, where you have a low time frame outside bar. Meaning, what's an outside bar? Where you have a candle here. The next candle after takes the low and the high of the candle prior all in one candle. It could be in two candles, but then I refer to it as an implied outside bar. And so anyway, boom, we get that closure. Why is this nice? Because it's very clear that at this time, this is high resistance. So what did I just say earlier? If we know the higher time frame is expanding on a low resistance liquidity run, right? Let me refer back to this chart, right? You see all these low resistance highs? The higher time frame is expanding on a low resistance liquidity run. That means that the lower time frame is going to be high resistance. So now we can use this to our advantage. We can understand, okay, every time we push down against this trend line, it's high resistance. Bang, 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 bang. Now, understanding the pothole analogy, we can take a trade off of this to get in for this entire move up. And so what's cool is, like, let's say we understood this concept. We could take this outside bar all the way down here, wherever it was, right? So here's the outside bar. How many points do we get off of this 15-second outside bar? Understanding that this was high resistance. Let's say you took this up to the drawn liquidity, which was PM high, I'm pretty sure. So there's a session liquidity. Or no, it was I would probably just target, since there's no drawn liquidity, I would just target this consolidation, right? That is like 10R, right? Absolutely beautiful. So that was something I want to talk about. I think that is super cool. Essentially, the moral of that is when the lower time frame, or when the higher time frame is expanding, running through low resistance liquidity, expect the low time frame to be high resistant, and then use that to your advantage. So that's the lesson that I wanted to give today. Now we're going to review the market. Very fascinating day today. Today I caught a 2.15R trade. Let me actually get out the screenshot and my Twitter post about it. Everyone, I highly recommend going on my Twitter and liking these, because right now they get 0 likes. Well, 1 like. That's me. But okay. Anyway, this was the trade I took, right? Once you understand what an outside bar is, this should pop off the chart, guys. This should pop off the chart. Why? Because look at it. Look at it. It is probably one of the most textbook outside bars. I can't zoom in, apparently. One of the most textbook outside bars you could get. It really is. I mean, let me get a version where I can zoom in. So, one of the most textbook outside bars you can get. We have an old candle. The next candle after takes the low and the high, and it comes with SMT. This is one of the most powerful signatures in the market. An outside bar with SMT. Note, we also were below the 90-minute true open, and we swept liquidity below the 22-minute true open. So, true opens have been efficiently manipulated. I know that this is accumulation. We have a fair value gap here we're delivering from. Boom, we get the outside bar. I enter, right? And, well, here's the trade. Here's the execution. Bang, bang. And here is the live stream of me taking it, right? You can go watch this if you want. But what's cool is I knew at the time when this happened, listen to this, because this is obviously accumulation, the 15-minute gap, manipulation, below the true opens, and then a 1-minute outside bar. And then, so if this is accumulation, this is manipulation, we're probably going to distribute to AM high, but I think we just got to, I just want to be content with a 2R. So I knew we were going to go to AM high. I knew it because it's very clear that this is accumulation. We obviously formed the low. It's very clear that we formed a low within this 15-minute gap, so we've manipulated the true opens. I knew I could have held this for the AM session high, and that would have been what? 6R. which is so cool. And you can see that that was the case. Let me show you. So here's the outside bar, low of that old candle, and high get taken in the candle after, and then bang right there. And like I said on stream, I could have held this all the way to AM high. Now this drawdown would have been a little scary, but nonetheless I could have held this all the way to AM high, and this would have been 6R. Pretty insane. Pretty insane. Like I said though, I would have I don't really see much point in going past this this consolidation here. That's gonna be a good draw on liquidity. But anyway, I thought that was pretty cool. That was the trade that I took. And then in the pre-market, so this is very beginning of my live trading window. This was 836. We just get a simple inversion for value gap with SMT. Once again, this is gonna be amazing signature in price. Now, why not this one? Well, because I don't like it as much. Period. This one has low resistance liquidity, meaning I can go enter on this inversion and go break even at that low resistance liquidity, knowing there's a pretty good chance we do not return. And then when we don't return, well, now look where we go. We go fill the overnight gap and hit Asia high. This is 8R, by the way. And also, we're delivering from a new week opening gap as well. See how the market interacts with this? So, SMT, inversion for value gap. And ES swept the lows. So, this asset, so NASDAQ's kind of just using the rejection block or not sweeping the lows. We sweep out these lows here. So, sweep, boom. Once again, inversion for value gap, SMT. And sweep of these lows here. And then, boom, that's it. We go higher. And once again, this inversion is better than this one because this one has some nice low resistance highs to go break even at. This one does not. This one does not. I mean, that's just my own opinion on why I like this one better than this one. And so, with the conviction in the overnight gap, once again, when you guys don't know what to use for bias, overnight gaps are going to be like the best thing in the world. Overnight gaps make it so easy. Whether it's an old one from a prior day or the one that's going to form today, if you just go for the overnight gap and target that overnight gap fill, as your bias, just understand that most of the time that's like, just trust in that, and it's gonna give you edge. It's gonna give you crazy edge if you just trust the RTH gap is gonna be the bias. You're gonna it's gonna help. It's gonna help. Just trust those overnight gaps. So anyway, the cool thing about this is there was a session high, Asia high, at the high of the overnight gap. So if you guys don't know what this is, basically it's called the RTH gap, and what happens is these tend to get filled back in, and you can see that was the case right here at market open. We also had a market open trade where there's two different ways you could take it. This is not something I saw in the live markets, but something I'm noticing after, where we form SMT. Now there is equal lows, but a lot of the time, sometimes equal lows will form, and with the intent of they're being left for later. And so sometimes you can take trades like this, understanding that these equal lows they're not an immediate priority for the market. Understand that with this SMT and with these low resistance highs, like I wouldn't really care about those equal lows, because understand that they're making these equal lows for the market to come back to those later. And so anyway, boom, low resistance liquidity. Nice thing about this outside bar, or in this case, implied outside bar, right? Because we have an old candle, a red one, that the next two candles take the low and the high. So this is implied. It's not the original version, but candle here, the next candle after takes the low, and the next two candles after take the low and the high. Outside bar forms, enter on the close. We also manipulated the 90-minute true open, and then expansion to go fill the overnight gap. And yeah, so that was one way you could take it. That would have been on the 1 minute. And then here's the way you could take it on a 3-minute, same thing. Also an outside bar, just on 3-minute with the same thing. We have a candle prior, and then the next candle after takes both the low and the high of the previous candle. So yeah, and then once again, with low resistance liquidity, you can just go break even pretty quickly, and then you don't have to worry about, and it just goes in and goes, it just runs. So, okay, what else? Yeah, like I was saying, when the higher time frame is expanding on a low resistance liquidity run, low time frame is going to be high resistant. I already covered that. We had a really nice Phoenix model, both on the 1 minute and the 5 minute at the highs. You can see clearly we have a rejection block. We form a bearish SMT with it, and then bang, testing that rejection block. Just put a limit order at that rejection block with SMT, and then you can see we go down 7R and then much further. And this was also a 5-minute rejection block. This is still the 1 minute chart, but this was also a 5-minute rejection block as well. And yeah, it was above both the 90-minute and 22-minute true opens. You guys starting to see how true opens are kind of just like your filtering, your filter on price. It filters out, it just gives you a filter to work with, and it really does help. Otherwise, I would not talk about them. The true opens really do help. And yeah, I loved this lunch macro, by the way. This was another way you could take this lunch macro. This was just an inversion for value gap. We had a liquidity sweep. You might be saying, this ain't a fair value gap. Why are you marking this out? Because it's implied, right? If I take the low of that candle and the high of that candle, kind of squish all these candles together, and this is the true imbalance in price from this low to this high. And there you go. That's where the market efficiently filled, sweeping at that low. We close above an old gap. Here you can see, here's the low of the candle right there, the high of the candle there. We close above it, boom, break even spot, and then we do not come back, and we run those low resistance highs perfectly during the lunch macro, so right at 11:50, which is pretty cool. And once again, true opens were efficiently manipulated. So, is there anything else? Yeah, and another way you could have taken that 15-second outside bar is just straight up to the data high. We had a news wick right here, so boom, outside bar, straight to the news wick. That's 2R. All right, I think that about covers it for today. Thank you guys so much for watching, and I will see you guys in the next one. Peace out.